All right. Good evening, everyone, or good afternoon, or even good morning. I am a little early, as usual. And we're also going to have Paul, London Paul from the Serious Report. He'll be joining us at the top of the hour. If you're listening to this recorded, you might want to jump 10 minutes ahead because I usually come on early and have a word with everyone. I think there's a lot of you here. Thank you, Dimitri, for your super chat. At what scenarios and when do you see dollars and bonds selling off? Well, I think the dollar and the other fiat currencies are selling off already versus gold. That's how they will, in my opinion, drop. They can't drop against each other anymore. I think the central banks and the governments are, we're going to see what's happened to Credit Suisse tonight. They just came out about an hour and a half ago, the Federal Council, the federal government in Switzerland, and we're going to look into that. Everything is changing very quickly right now. So let's see who's here. We've got Marat Kalenda, Richard Pickering, Joshua Porter. Everything's going well. Joshua Peter Van Lieshout. Good day, Marat, from Misty Mountain Camping, Tweed Valley, Australia. We've got Honig. Loads of you here today. I'm sorry if I can't see all of you. We've got Silver Task here. He's a moderator. Thank you, Silver Task. Davide is here. Hannah, Endurorama, Arsenal Rain. So many of you. We've got Lord Humongous, another moderator. Chris Williams. Yeah, many of you. So we'll wait until Paul comes on to talk about Credit Suisse and UBS and what the Swiss government has done. And it's really interesting. I think it has a lot to do with derivatives, and you'll see why. So the other thing I wanted to talk about is the political situation in the US concerning President Trump, about him maybe being arrested. Some of you think it's all orchestrated. Be as it may, I think it shows. It's one of those symptoms that I've been speaking about for years here on the channel about hyperinflation. You not only have financial, monetary problems like heavy debt, bank collapses, inflation, but you have also a lot of how can I say, division politically and political chaos, so to speak. And I think that's happening everywhere. So this could be a trigger if Trump is really arrested and there's trouble. And we're going to look into that too. Whole Bitcoiner says, I said Credit Suisse would be gone by 2026. To look at gold when within the last few days is not a true stacker. The interest rate increases broke the bank before the households. Yeah, Trump behind bars will say trust the plan. Credit Suisse will not default. Well, Credit Suisse has been taken over, and the Swiss. Well, we'll come to that in a minute anyway. Over here, there's about 4,500 banks in the US. Yes, if you go onto the FDIC website and the quarterly report, I've spoken about that with John Titus here about a month ago. And there is quite a lot of banks in the US. Cowboy Twinkie, thank you for your super chat. Cowboy Twinkie is in New Orleans. MM 126, I agree. Ant H thinks civil war is coming to America. That's a possibility. Scott 49 140, what part of a currency supply do you draw from an ATM? Is it other people's deposits? Well, it's actually your deposit with the bank. Yeah, if you have $100 and you take $50 out from your account from the ATM, you taking a deposit out from your account, unless you steal someone's card and you take someone else's currency or yeah. Matthew Lizwanazio, how come the market makers and prime brokers are allowed to create counterfeit shares? Well, that's one of the reasons why the system is so, collapsing, because everything's fake. They hypothecate, especially here in London, they rehypothecate everything. We're going to come to that when Paul comes on. He should be coming in about 4 minutes. For those of you who don't know Paul, this is his blog, and I highly recommend it. I subscribe to his reports, and it's good value. Oh, here he is. He's here already. It's good value as well, about $55 a year, which I think is pretty good. Hi, Paul. Well, there you go.
Good evening, Mario. How are you?
I'm all right. I'm great. I hope you're doing well too.
Yes, fine, thank you.
Good. I was just showing the viewers because I started a little earlier, usual. And I was just showing them your website and that you have a really good service for only about $55 a year, and you do podcasts regularly.
Well, thank you for showing people.
Yeah. So let's start here with, I guess you don't want to talk about your summer holiday plans?
Yeah. Yeah. How anticlimactic would that be?
Yeah, maybe you tell the viewers why I said that.
Yeah, I just jokingly put a tweet out saying that I'd be on with Mario at 8 p.m. UK time. And I guess we won't be talking about holiday destinations in the summer. So we're just being a bit silly. But.
Yeah. So the title of the live stream is "The Clock is Ticking for Credit Suisse and the Derivatives Time Bomb." So just to tell the viewers what's happened, and I was listening to it, the federal government of Switzerland, they call it the Federal Council, they came out at 6:30 p.m. London, and they announced that Credit Suisse has been taken over by UBS, I think for about 3 billion Swiss francs. And they're using the Yellen line that it's not a bailout, even though the government has backstopped really the deal with $100 billion franc guarantee. And someone asked actually from Reuters, we're not supposed to be doing bailouts anymore, the crisis of 2008. And then she said, oh, no, this is a commercial transaction, but between UBS and Credit Suisse. So my question, Paul, if this is a commercial transaction between UBS and Credit Suisse, why did the government have to get involved?
Exactly. Yeah, I mean, you've summed it up. I think what it is, where this stems from, and this fear of having to admit to anything that's moderately approaching a bailout, or in this case is a bailout, is because there was this kind of agreement reached after 2008, which of course was never going to stand the test of time. We'll never have bailouts again, honestly. Ironically, the Europeans are spitting the proverbial blood about this because of what happened with Silicon Valley Bank. From their perspective, sorry, you are bailing banks out. Hang on a minute, we'd agreed never to do that. Okay, there might just come a point when a European bank has to be bailed out and they can get off their sanctimonious high horse and we'll sit there and go, oh, actually, yeah, okay, well, this isn't a bailout either. But yeah, I mean, if you can have a notional transaction between UBS and Credit Suisse, but if you're going to have this 100 billion backstop credit line from the Swiss National Bank, okay, how exactly are they financing that? I mean, it's a bailout.
Yeah, I mean, they say it's a Swiss National Bank, but it's actually the Swiss government that is backing it, because they said that the Swiss National Bank gave a guarantee last week of 50 billion, and that didn't work. So now the government has had to step in. I think the Financial Times is not being really honest. They should say the Swiss government has agreed to offer. The Swiss government is really behind it, and the taxpayer.
Yeah, like anything, we'll find out more in the coming days. I think it was a bit vague, including, well, what was the price paid? But what we do know is it's a sharp discount to Friday's closing price, which was, I mean, on the back of the fact that if you go back to 2007, it was 80 Swiss francs a share. And as of Friday, it was 186. And this was on the back of the fact that obviously it fell. I think you're down to about 170. And then there was, as you say, there was a statement, well, we'll backstop. This is the SNB, the Swiss National Bank. We're going to backstop Credit Suisse with this 50 billion loan. And the following day, it didn't make a scrap of difference. What we do understand, although that has to be, subject to qualification, but there are statements that at the back end of last week, Credit Suisse was suffering about $10 billion a day of outflows. And this is really, I think, what has caused this panic over the weekend. And we have to find a solution, and we don't really want to call it a bailout. We don't want it to appear like it's been nationalized, although there were rumors it might be nationalized, because at one point UBS wanted to buy it for half the price they ended up paying, or so the rumor says. But clearly they panicked. Clearly the promise of a $50 billion loan wasn't sufficient to calm the market, certainly not with respect to Credit Suisse's share price, but also, the rest of the European banks, they didn't respond positively to this. And I think it's one of those things, though, it's as much a credibility issue. We all know Switzerland is regarded as being a major financial center. And I think if you'd had to, in inverted commas, nationalize the bank, it would have created an extremely bad sent a really bad signal, and the optics would have been horrendous. But having said that, from my own personal opinion, I think the idea that we're going to railroad this merger through with no shareholder vote, I mean, that sends an extremely bad signal, because
it takes 6 weeks usually in Switzerland to approve a takeover like that.
Yeah. Now, on the one hand, I can understand why, but on the flip side, if you're now looking at investing in Switzerland, or you have money in Switzerland, I think that would just make people extremely nervous, going, hang on a minute. So I could be investing in an institution, and for some reason something happens and they railroad a deal through with no shareholder vote. And therefore it's counterintuitive in one sense to announce it with no vote, because it might just encourage further capital outflow for different reasons than we have seen, but this might be something that becomes a problem. And I'm only speculating, of course, in a broader sense with regards to Switzerland. And okay, you can have this merger, but what happens if this doesn't stem the flow of outflows as well? I mean, there's no guarantee it will. There's no guarantee the market's going to look at this favorably. And it still doesn't really address the fundamental problem of, also with regards to UBS. I mean, due diligence doesn't get completed in 48 hours. So, okay, they're going to have, maybe this is part of the reason why there's a credit line as well, is to kind of backstop maybe some of the problems that UBS may face, not least things we do know, there's all the litigation issues. I mean, they're not going to disappear because Credit Suisse is now going to be merged with UBS. So there are many problems. If I'd been sat there looking at this deal, I'd be going, hang on a minute, I haven't done my due diligence. I need to look at the balance sheet. I need to know what I'm buying. I need to know potentially where the risks are. Okay, we know there's enormous capital outflow that's been causing problems. But what else might potentially be a problem? And if I'm going to buy this bank, I mean, then I myself or my institution inherits those problems. I mean, so it's absolute for me, just panic stations. We have to do something, and it's all about, we need to restore confidence in the market. But if I was sat there heavily invested in Switzerland, I'd be thinking, hang on, do I really want to stay as a result of this? And there's no guarantee. Okay, they'll strip bits out of the business. They might sell some parts off. They've talked about reducing the investment arm. Okay, fair enough. But at the end of the day, what's left of Credit Suisse? And maybe this reflects the price they've actually paid for it. But shareholders, they're going to be furious, and understandably so. I mean, don't know how the Saudis will react to the fact they've got a 9.9% stake in Credit Suisse, and they've just been blindsided. Okay, so
I don't think they're going to be very happy with
no,
that.
exactly. They're going to be.
The other thing, Paul, I noticed, I listened a little bit to the press conference from Switzerland. Some of it was in French, which I understand well. Some in German, which I can understand a little bit. And I heard the head of the finances of the Swiss Council say that she's been in contact with Janet Yellen and Jeremy Hunt. So I think it has a lot to do with derivatives, and we know that Warren Buffett said that derivatives are weapons of mass financial destruction. Do you think this is all about derivatives? The fact that they said as well, this is not just to save the Swiss system, but the whole global system. So do you think things are going to be calm tomorrow or tonight when the markets open in Asia?
Well, let's start with the derivatives issue. For sure, we know that, and I've made this point for a long time, interest rate swaps, when you look at the total number of derivative instruments, this is from the OCC, the Office of Comptrollers data, is about 72% of all derivatives are interest rate products. Now, we know that obviously in the last 12 months, interest rates or the Fed's fund rates risen to 4.5 to 4.75% range. So we know by definition, though I would expect to see some serious strains in the derivatives market, particularly with interest rate swaps, which of course are tied in with US Treasury. So, and the question is, this is one of those situations, when do these derivatives mature? I mean, there's maturity to these interest rate swaps, and I did something in my own podcast talking about the OCC data and how I don't look at the data yet for European banks, but certainly for the big US banks, they've got, and this is notional value, they have, some of them, tens of trillions of dollars of interest rate swaps maturing in less than a year, and that's from last September. So that potentially is a huge problem. So yeah, absolutely, it could be.
Yeah, and you touched on the LIBOR phase out as
yes.
well. That's
I'll mention that as well, because I think
that's one thing Lynette Zhang as well has been covering quite a bit.
Yeah, basically we all know, well, maybe not everyone, but LIBOR is officially phased out the 30th of June this year. But like everything, even though they stopped issuing new contracts at the end of 2021, there are enormous amounts of contracts outstanding. Have they actually been? So obviously everyone's moving to SOFR, SOFR. Now, have those changes been completed? What we do know is, and this doesn't mean some haven't been resolved, but there are, again, tens of trillions of dollars of derivatives whose contracts mature after the deadline of the 30th of June. Now, There are also loans, trillions of dollars of loans. Now, if they have those contracts have not been converted, or the risk is not just litigation, but you could have defaults on the just technical defaults on the basis of these contracts no longer exist effectively between two parties, and we can't quantify precisely what it means, but this poses a massive risk potentially to the financial system. And this is coming at the end of June, because as unfortunately people who, like me and you, Mary, who've worked in the financial sector, and anyone who knows just generally how poorly run the financial sector is, don't assume, even though they've had years to prepare for this, that they've actually taken the necessary measures to, and isn't some last dash and on the 28th of June, oh, hang on, wait a minute, we didn't sort these problems out with LIBOR contracts. So that's another potential problem. But I mean, it's one of those things, it's difficult to look on a bank's balance sheet and really quantify precisely what might be fundamental problems, where there might be black holes in the balance sheet. And I'm not, sorry,
derivatives are off balance sheet. That's the whole problem.
Yes, well, some of them aren't, but yeah, a lot of them are. And that's the fundamental problem. It's a black hole.
Yeah.
And we don't know the extent to which, I mean, like anything, there's counterparty. There's always counterparty risk. And it could well be because obviously with Credit Suisse, when you have that amount of capital outflow, there's no doubt that there was a risk of the bank becoming insolvent. So yes, I understand why they have to take the necessary steps that they have, but again, we don't know what the derivatives portfolio they have. We don't know what the contagion counterparty risk problem is, but it's one of those situations that we're back to this problem that when you raise interest rates, and the other thing, of course, is just a small point for anyone who doesn't know, if you have deposits, they're liabilities, and banks often will offset those liabilities by buying assets. And by buying assets, we can mean what's used to be the safe haven of US Treasuries, which from my perspective, they're not a safe haven anymore. And then obviously, if you buy those Treasuries, and because we've seen this enormous collapse almost of bond prices, corresponding to huge rise in yields, which is why there are notionally unrealized losses. But we're back to this point, there's these unrealized losses, and for the treatment of balance sheets in terms of the short end of the yield curve, they get away. They wouldn't get away with that. But a lot of banks buy the long end, so maybe 10-year, 20-year, 30-year. Now, what happens is they're not marked to market, they're just a par value until they mature. So the problem you have is you can have a balance sheet that just looks notionally okay, and when do these bonds mature? I mean, there could be, it's difficult to know precisely what the implication is in a broader sense. Okay, we've seen the problems that happened with Silicon Valley Bank as an example, and obviously it ended up having to sell its bonds at a significant loss, and of course that created this catalytic effect, which is why it ended up, of course, collapsing. Now, we're not saying the so-called too big to fails or GSIB banks are going to collapse tomorrow. We have to be very careful how we phrase this, but there are all these potential risks associated with interest rate swaps, associated with them buying bonds, and when they bought bonds, and then, of course, just a broader issue of, and I will make this point because I think it's important, we shouldn't lose track of the fact or lose sight of the fact that because of the Ukraine war and because the West made the decision to sanction Russia's central bank and freeze assets, and potentially now talking about finding a legal way to sell those assets, the risk is there's going to be a lot of high net worth individuals, sovereign nations, etc., who will be looking at their investments in Western banks and going, well, we could be sanctioned next. So maybe they're also contributing to pulling money out of financial institutions. And I don't necessarily mean just Credit Suisse. It could be all big banks, and it could be the Saudis, other
Yeah,
nations in the
yeah,
Middle East.
yeah,
It could
Paul.
be the Chinese, etc.
Paul, just one thing I wanted to add about the Saudis. I think they are the biggest shareholder in Credit Suisse,
Yes.
and they were asked to help, and they said no. And I think it was Jim Rickards who noted, Saudi Arabia now they've got a deal with the Chinese to sell oil to them, and they want to be friends with the Chinese with the BRICS. And the other thing that the Swiss did when the war in Ukraine started is that they froze Russians' accounts really quickly. And the Saudis, they're aligning themselves a lot more with that part of the world. So I agree with you with what you said there. A lot of money, a lot of this banking crisis could be all these very wealthy and institutions from the Middle East and Asia taking their money out of Western banks.
Yeah, absolutely. And of course, there might be institutions who have a presence in certain countries in the world as well, who might be wanting to pull their money out because it's just creating this fear that, well, maybe my nation will be next. And what's my association with this nation, even if in terms of business, what does that mean? I mean, it's created a lot of uncertainty. It's created a lot of animosity. I mean, it's just what we said at the time. Whatever people's perception of the Ukraine war is, there are many different beliefs or theories or who they want to support or don't support. The United States principally deciding and dragging Europe and its other vassal states into this agreement of let's sanction the Russian central bank was absolutely ridiculous. I mean, I'm being polite. I'd use far stronger language, but I'm not going to. It was, insanity, absurd. There's no adjective to describe what the fallout would be. I mean, and it's causing as well a lot of problems in terms of the usage of the dollar and de-dollarization. I mean, and this is why there was already big changes going on between the Saudis and the Chinese, but this made, as we're going to have to accelerate this process. And now we're starting to see between the Saudi National Bank and the Chinese Export-Import Bank that they're denominating loans in yuan. I mean, and this is not a surprise. I mean, because everyone's looking at this going, we're better off outside the dollar system. So again, it was shooting yourself in the head, the foot, and the torso with respect to the dollar. So, and it's just many things are all coming together at precisely the same time, but it was always going to inevitably be the case, and we've made this point many times before. They were caught between a rock and a hard place. You can't raise interest rates, and you can't let interest rates fall. Yeah, I mean, and we're seeing why, and I would arguably say, the fact they've got this long without it being a problem means there must have been some very serious steps taken to bail out, I would say, and I'm not being conspiratorial, bailing out or just putting some backstop in place across the Western financial system, because you can't raise interest rates from a Fed funds rate of 0.25% to effectively 4.75 without causing enormous problems in an interest rate swap market that it's notional value, hundreds of trillions of dollars. You cannot do this without there being ramifications. And it might just be that all these things are conflating now at the same time. Why, if you look at it with regards to Silicon Valley Bank, no disrespect, I mean, it's not a tiny bank. It's had $209 billion of assets. But remember, my immediate thought was, but this is a huge overreaction. You've got to do something about it. And now we're starting to see potentially why this is now, because we've got medium-sized banks in the US going, we need FDIC protection for uninsured deposits for 2 years. Don't know where they got the 2-year figure from, but it's spreading. It goes through this.
Yeah,
I mean,
it's
smaller
contagious.
banks, medium-sized banks. When does it become a problem in the larger banks? And there are rumors, and I stress rumors.
Yeah, that's what I
that
wanted
there,
to ask you, Paul, because last weekend, all the talk was SVB, and they bailed out the depositors basically, but not the bank. And now this week we're talking about Credit Suisse. So what do you think is going to be the topic for this coming week, or topics, i.e., how?
well, the question is it? I mean, look, Credit Suisse has been a problem for a long time to varying degrees. This is, it's not, I mean, a big shock with respect to what's happened. I mean, and most of it, of course, relates to just enormous amounts of capital outflows. I mean, and this has been going on in varying degrees for quite a long time, and it's been a problem. And they tried to raise, I think, 4.2 billion, I think it was Swiss francs back end of last year. That's when the Saudis got involved, and to try and sort of support the business. And of course, it just ultimately has not been successful. The question is there other sort of, too big to fail GSIB banks that potentially have problems? And I don't want to sort of pick on soft targets. Everyone has their favorites, and they always think such a bank's on the verge of collapse. And but the question is, and I was coming back to the rumors, and difficult to know, but there are rumors that there are European banks having problems. It's not clear who specifically they are, and don't jump to conclusions that it's the ones everyone likes to think it is, because it might not be. And maybe in the coming week we'll start to see, whether there's any substance to that. The other question is, and you made the point, to go back to your final point on the question, is how do the markets react? What's going to be the expectation when the markets open? How are they going to, because they didn't particularly respond well to obviously what was originally proposed for Credit Suisse, and it was the same with First Republic. There was the kind of bailout by a whole bunch of US banks, and the market went, no, I'm not really buying this, because I think its share price fell maybe 26% on Friday. This kind of indicates the market's not buying this.
Yeah,
They're kind of going, hang on, I'm not really sure. Is this really resolving the problem? And it'll be interesting, of course, this week that we start to see a significant sell-off in bank stocks in Europe, in the United States. Is there more substance? And if they're coming out with the statement, well, we had to make a decision with respect to Credit Suisse because there was broader implications. I mean, then the implication of that is, well, it could be specifically tied to Credit Suisse causing some contagion problem, because, as we know, all Western financial institutions are kind of lassoed together. So to what extent there is problems there going to create problems elsewhere? And I mean, that would tend to suggest to me it is their derivatives book, but as you say, it's effectively a black hole. I mean, I think it's like 95, 96, whatever percent of these big banks, that their derivatives are over the counter. I mean, it's completely.
Yeah, that's one thing I hope
Okay.
after this crisis that that this derivative casino ends, and because it's or if people want to how can I say speculate in derivatives, they have to do it outside the banking system, maybe bring back the division between commercial banking and investment banking. I wanted,
for sure.
I wanted to change the subject a little bit.
Sure.
Because it just looks like Zero Hedge is reporting that there's no it says no notification. Trump team walks back indictment prediction, promotes re-election rally instead. So over the last few days, people have been all like, oh, we're going to protest. There's going to be Trump is going to be arrested. But now it looks like they're walking this back. I wanted to ask you about the political situation, and not like what you think about Trump or Biden, but it seems that there's so much uncertainty and chaos in the American political system that, don't you think that smells of one of the symptoms of when you have hyperinflation? You not only have inflation going up, you've got the political system also chaotic. You've got like a lot of debt. You got banking problems. So do you think this could be, even though they've walked this back, there's still bad blood here, I would say?
Yeah, you're right. Let's not get into. I mean, I can't stand mainstream politics anyway. I mean, we have to sometimes talk around, but I don't. There's no solution with Democrats or Republicans. Rather, like there's no solution with Conservatives and Labour in the United Kingdom. But in a broader sense, going back to your point, let's just go to Biden just briefly, because what seems very clear to me, and okay, there's people who will profusely disagree with Seymour Hersh's statement about Nord Stream, and okay, that's fine. I tend to, from my perspective, unsurprisingly, maybe for some people, I consider it to be an accurate representation of what's happened. Now, if we work on the basis that it is, and we look at the situation, and clearly for Seymour Hersh's source, we don't know who it is, to have leaked it, I would suggest that has come from the Pentagon. Don't believe it's the intelligence agencies, but I would suspect it's someone in the Pentagon. And that indicates to me that the US military, in some capacity, bear in mind, this is not black and white. Let's not become sort of binary about this, because it's very complicated in terms of the political structure in the US. But there are certainly elements, I would say, in the military. I think there's elements in the intelligence agencies even, who have had enough of the Ukraine war for various reasons. They want the United States out of the Ukraine war. Not everybody, of course. So before anyone jumps in, I'm not saying, again, it's complicated. We know there are clearly elements in the Beltway who want this war to carry on forever and a day. But I think that was indicative of the fact there are elements who would just want out of the war. And I'm beginning to suspect this is also why, remember, we go back to those allegations about finding top secret papers in Biden's garage in a Corvette, I think it was, if I'm correct in that statement. Yeah, again, that was kind of trying to throw Biden under the bus.
Yeah.
So I would suspect politically, and this doesn't mean it's Republicans per se, because that's not, again, politics is just a mirage. It's like saying, let's differentiate neoliberals and neocons. It's pointless doing this. But I think there are elements who would like to see Biden gone. Now, we have to be careful what I mean by that, but I think it's interesting that Douglas McGregor, who I think is obviously he was a colonel, he's ex-US military, and people deem him to be very controversial, but he appears to know people. I think he did some interview, and right at the end, apparently said, I wouldn't be surprised to see Biden out of office within 90 days. Now, okay, it's a bit of a throwaway comment. It wasn't followed up, but it kind of ties in with the fact that I think there are certainly elements in the US who are very unhappy with the Biden administration, or elements, and I think it's tied to the Ukraine war, because I think from their perspective, they just need to walk away from this. This is just a farce.
Aside from the banking crisis in the US, let's not forget the debt ceiling crisis. And
yes, so there's all these things, like you say, and now we've got this.
I mean, there's so many problems at home, and they're worrying about Ukraine.
Yeah, so, and it's just, I mean, what does that mean? I don't know. Does it mean anything will happen? We don't know. I mean, I'm not here to speculate on that, but certainly politically, there is huge divisions. We've always, from my perspective, regarded politics in the United States has just been this single political entity. It's all kabuki theatre. Everyone sits there and shouts at each other, and then they go off afterwards and all kind of go to some bar together and laugh about the real politics, which is just one gigantic happy family. But what we've certainly seen is that's not the case anymore. You're starting to see elements of cracks appearing and disagreements, and this is just, I think, symptomatic of what we refer to as, or I refer to as, the US empire in disintegration phase. And it's political, it's economic, it's financial, geopolitically. I mean, look at what we're seeing globally and happening. I mean, I mentioned this for years, that the Saudis and the Iranians were having rapprochement. One day to be an official announcement. And I had people saying to me, this is nonsense. You're talking absolute rubbish. Go wait and see. Here we are, it's happening. And, now Salman's invited Raisi, the Iranian president. You've got, you're seeing these changes. And this is fundamentally impacting, of course, the United States. And people don't want to believe the dollar. There is de-dollarization going on. There is. And all these things are sort of conflating now, coming to the point of Trump. And I made this tweet, and I would stand by this, and I'm no fan of Trump. There was expectations of him, and he didn't achieve whatever he was supposed to achieve, but okay. But I made the point, and for me, if they were to arrest Trump, I think they would be handing him the next presidential election. I genuinely think that would be the gravity of this. So maybe this walking back, maybe this not happening. Okay, we don't really know. There was definitely some indication that something might be happening, but it's clearly people in the Republicans who don't want Trump to stand again as president. I mean, of that there's no doubt. But could Trump stand as an independent? Well, possibly. But I think something like that would just give Trump the baton to go to be president in 2024, given everything else that's happening. So it just is indicative that the entire political structure of the United States is in total chaos, and there's no joined up thinking. There's definitely elements who just look at the Republicans. There's very outspoken who say we have to end the Ukraine war, but then of course there's elements in the Republicans who are already gunning for some sort of escalation of conflict with the Chinese. Which, I mean, if we think Ukraine was a stupid move, Taiwan would be even more ridiculous move, but that doesn't matter. But this is all indicative of end of empire days for me.
Yeah, just wanted to, there's a super chat here from Echo. Thank you, Echo. He says, well, if the central banks flooded the banks with gold and silver, then things would calm down. Well, I think what the central banks, they don't have that much gold in the West. And I think what they need to do is to unwind all the paper shorts that the bullion banks have, and that would drive the price higher, and that would reliquify the central banks. And just wanted to show you, Paul, and the viewers here, because gold, of course, and silver have been doing quite well in the last few days because of fear of a banking collapse. And there's a guy on Twitter, Michael, hashtag Silver Squeeze, and he noted that, as you can see here, a huge amount of gold buying from AppMex last week, and then also silver. So, Paul, I guess you've been a stacker, and I think it's more important than ever now that with all the troubles going on in the banks, that people have some gold and silver. I mean, I'm not advising people, but that's what I've always said. Let's say I heard that Roku, the company Roku, they had about $500 million of cash with SVB. I mean, if they had known about how the system works, they might have bought a little bit of gold. Because I saw that Peter Thiel last year for Palantir, they announced that they bought $50 million of physical gold.
Yeah, I mean, look, everybody knows we're both big advocates. It's not financial advice. People have to make their own decisions. I'm not bothered if people buy it or don't buy it, but given recent developments, and okay, there was this idea that the Fed was going to backstop all uninsured deposits, meaning over $250,000 per customer per bank. And then Yellen kind of didn't say that and kind of went, well, we'll look at it on a kind of ad hoc basis. And if an institution is a contagion risk, then obviously we'll have to look into this. And almost, okay, and if we take it literally ad verbatim, then the argument is you could have someone with enormous amounts of money in a bank, say, well, $100 million, $50 million, who all of a sudden may have now be thinking, my deposits are uninsured. Now, am I going to play or risk the chance that, they may leave them uninsured and I might lose all my deposit? Now, the logical conclusion to this would be, and it's not like everyone's going to stampede into buying gold or silver, but it might, you start to get high net worth individuals going, well, I might need to put a proportion of my money in as basically a fail-safe against the fact that now there is uncertainty. And, there is an argument, people going, well, all these small banks, everyone's going to move their deposits to big banks. But here's the thing, big banks don't want all these deposits. During 2020, they were desperately trying to tell clients with big deposits to offload them in money mutual funds, or just get them out of our bank, because for banks, they're liabilities. So it's not a simple question that all the deposits get concentrated into smaller banks, but the logic is, and okay, we have to be careful, paper prices being paper prices, but we certainly saw some significant hike in gold and silver during last week, particularly the back end. And even though it was, I think, was the options expiry on Friday when you'd normally expect paper prices to get hit, obviously it didn't, and the reverse happened, because I think it's one of those situations, it's not exactly physical realities consuming the paper markets, but it might be indicative that all of a sudden high net worth individuals, maybe some institutions, small, going, we need to start thinking about putting some money on the table and buying gold. They're less likely to buy silver. I think the silver's is going to be supported by, obviously we've seen it with India and China in 2021 and 2022. But the issue is they'll be giving consideration to this. Now, it doesn't mean they're all going to stampede into it, but the longer this goes on, the more uncertainty, then yes, I think that's a distinct possibility. And yeah, with retail bullion dealers, I know some people, and they're telling me that last week they had a lot of business. They were selling an awful lot of, and it was gold and silver, which is not, I mean, okay, and we have to put this in context when compared to sovereign nations or buying it, or institutions, it's small, but in a retail sense, it's extremely buoyant. But, I'm back to this point. I don't focus ever, and I've said it for too long, that I'm not interested in the paper price. At the end of the day, the price will sort itself out when physical reality trumps the paper nonsense. That will come eventually, and maybe this is one of those situations where it will cause it to accelerate quicker. As much of this though does depend. Do they manage to calm everyone down, and we can kind of move on from this, and maybe in a couple of weeks people have forgotten this ever happened? That's the fundamental question. But the longer this drags on, the bigger the risk is. More and more people want to buy gold and silver as an insurance policy, because here's the thing, if you have enormous deposits, well, let's say there's someone has $1 million in a bank, they might be now going, hang on, well, am I going to split this between 4 or 5 institutions? Do I really want to do this? Or, maybe I want to start looking at putting 10% of my wealth into gold, or maybe they want to buy gold and silver. We're just using examples to illustrate the broader point you're getting at. And I think that's now looking more likely than it has done for, well, a considerable period of time.
I just wanted to ask you to, because I don't focus on it, but a lot of people.
Oh yeah, I know. Yeah.
No, not that, but no, I wanted to ask you something else.
Okay.
because a lot of people are talking about Bitcoin. And, yes, Bitcoin has risen quite a bit, but for me, the problem is that I can't hold a Bitcoin. I can hold a gold coin or a gold bar or a silver bar, and that to me is no counterparty risk. So I wanted to just share this, just have your thoughts on Bitcoin, because there's a lot, I can see some comments about Bitcoin and what you think about Bitcoin.
Yeah, look, everybody knows. I mean, I'm never hidden this. I'm not a fan of Bitcoin. I don't personally like it. I don't have some grudge like this. I think there's people who try to make out there are the gold bugs and the Bitcoin bugs, and they all hate each other, or some of them hate each other, and they're all, and that's not the case. For me, I'm not interested in it, and it's my personal viewpoint. I don't mind if people don't share it. In fact, I don't mind if people don't like it. But I do kind of find it ridiculous when people say to me, you just don't understand it. That's why you're not interested in it. I mean, I've spent longer than a lot of people have invested in it, understanding things. And for me, I don't see it has a future. And why I don't see it has a long-term future is because it keeps being reinvented as something different. I mean, at one point, it was going to be, the payment system of the future, and then that kind of got dropped, and now it's coming back, and people think it's going to replace the dollar. They think it'll be a globally used currency. People saying, well, the Russians and the Chinese will use it. They will never, ever use Bitcoin as a payment mechanism. This is not going to happen. There isn't going to be sovereign nations adopting it. So we need to forget that.
Only El Salvador, I guess.
Okay, yes, but what I mean is I'm talking about, no disrespect to El Salvador, but I'm talking about European nations or the United States, etc. It's not going to happen. There's no chance that it will ever gain adoption as a payment mechanism. I mean, and trying to call it, digital gold, it's just trying. There was this big move to try and get people not to invest in gold and buy Bitcoin. But okay, has Bitcoin shown itself to be an inflationary hedge in the last year? No, it hasn't. I mean, absolutely not from the price it was. Now, I'm not saying, and I've been very straightforward about this, people can make enormous fiat profit from this. And some people have done in the past. I don't have a problem with people doing that. But let's just be honest about what Bitcoin represents in reality. Now, again, people say, well, that's your opinion, fine. You don't know what you're talking about. Well, maybe I do know what I'm talking about. And, and just because I don't agree with people who are exponents of it, but I just find there's a lot of flaky, wishy-washy comments made about it, trying to blind people with all this idea that somehow it's a store of value, which I don't see. And I can see why it has appeal, and I understand, because people are fed up with fiat monetary system. They're fed up of banks. They're fed up of everything associated with the financial system. And I'm totally with them on that. But the problem is they're just trying to find an alternative. And they think Bitcoin's the alternative. They think it's totally decentralized, which it isn't. They don't acknowledge Bitcoin whales that exist. They acknowledge the fact that it's like, no, there couldn't be a backdoor into it. It's impossible. No, it can't be this. But they so desperately want to believe that it's a viable alternative and that it's going to be the payment system of the future, etc. And that's what worries me, because it becomes a belief system. And I would use the same argument. I don't see gold and silver as a belief system. And that's, I think, the fundamental difference. If you start to believe in anything to that extent, then I think then you can risk stopping seeing the wood for the trees. But, at the end of the day, I'm not going to criticize anyone for owning it. Yeah. That's your choice. Yeah. But don't expect it to be something that's going to usurp the dollar in the future, because there's no scope for that to ever happen.
Mm.
And we're seeing, okay, so what do people think like a future BRICS currency is going to be? I mean, how much of the world will adopt that as a
Yeah, I mean, the BRICS countries have been buying, they bought the most gold on record since the Bretton Woods agreement last year, and they're buying a lot more this year. They're not buying Bitcoin. Yeah, Paul, just wanted to change the topic here as we've got another 15 minutes. Just as if there isn't enough going on in the world. This coming week, we've got the FOMC meeting on March 22nd. They'll decide on rates. What's your view? Can the Fed really raise rates? While, if you look at this chart here, they've started doing QE again. They've increased their balance sheet. Or do you think they're going to raise a little bit and then stop? And how do you see the other central banks acting?
Well, okay, let's start. The European Central Bank raised it by 50 basis points to 3.5%. Coming to the Fed, yeah, you're absolutely right. The Fed, and I would arguably say this is why we saw this huge fall in bond yields and rise in bond price across the entire yield curve, because then we find out. I mean, again, the Fed's just pumped 300 billion QE in a week, and I would suspect they're the buyers of these bonds. And obviously, they're trying to support the bond market because we know the bond market's a huge problem. The question is, with regards to this, do they have to continue doing it? Because, I mean, it is possible, even though it seems ridiculous to say this, that you can have QE and raise interest rates. I mean, kind of like Europe's been sort of doing it, and so it is perfectly possible to do that, even though it sounds ridiculous. And but we're sort of past credibility anymore. The more important point, I think, with regards to this is, yeah, they could keep doing this to try and keep suppressing the yields, but at the end of the day, then we have a situation where then they're sort of giving up, because I think a lot of this is trying to just defend the dollar. That's what it's about. It's less about curbing inflation. I'm the first person to say, the Federal Reserve is clueless, absolutely useless, and I don't have any reason to contradict that. But if I was looking for a reason that they keep trying to raise interest rates, it was to try and support the dollar. And it doesn't really seem to be working anymore. I mean, we've had a situation where they were raising interest rates, the dollar index fell. And the dollar index last week kind of went up, then it went down again. And weirdly, but not surprisingly, we saw this big move out of the dollar into, people were buying the pound, the yen, the euro, etc., the yuan. I mean, you wouldn't expect to have seen that on the basis of the perception of the financial crisis coming. But the question comes back to, okay, here's the options they've got. They pause and do nothing. If they continue to raise interest rates, what does that send to the market? I mean, you would think the market would react extremely badly to that, given we seem to be in an understanding we're in this position because of the Fed raising interest rates and what's happened to the bond markets. I mean, are we going to see a reaction where bonds keep being dumped, and do the yields start rising again? Does it then potentially put more institutions in that window where unrealized losses could potentially become a problem? So are they going to kind of do this? Well, I mean, almost like Japan will just keep suppressing bond yields, will keep QE going, and what's going to happen to the dollar? Well, it starts to put weakness with respect to the dollar. The flip side is they could go, well, let's lower interest rates, but then that's equally going to be bad for the dollar. It's going, and again, it sends the signal that we've given up on curbing inflation. Even though there's an argument it's not going to stop inflation, because I don't think it will stop inflation, or it's going to contribute to stopping it, but it would send the signal we've given up trying to curb inflation. So that will be well, notionally a positive for gold. And again, we're back to this thing where they don't really want gold breaking record highs in the dollar. This sends a very bad signal. So it's kind of damned if they lower them.
Yeah.
If they don't do anything, they'll perceive to be sitting on the fence. If they keep raising it, then, so keep raising interest rates, blow up everything, lower interest rates, and just create more and more inflation and blow everything up.
Yeah.
So but I'm not really a kind of someone who bets on what they're going to do. The logic would be you would stop raising interest rates, but
Yeah.
it depends. Do they think they've got what's happening now under control, and maybe that they stupidly imagine they have done? In which case, they'll keep raising interest rates, and maybe they'll just go do 25 basis points this time instead, just in case.
Like the markets are discounting rate cuts by the end of the year as well. And one thing that I think they might force them, and I think that's what gold and silver are sniffing, especially with record sales we're seeing over the weekend, from maybe not, huge, or there could be a lot of wealthy people buying physical gold and silver in the US and the UK. But let's say the banking situation does improve, and then the G-SIBs, the too big to fail banks, get in trouble, and the Fed and all the other central banks have no choice but to start QE again and start cutting rates. Don't you think that would be a signal that, we're going to have, they're going to choose hyperinflation? And I know hyperinflation is something that is very rare, but I think that's the way we're moving personally.
Well, okay, hyperinflation, is a confidence event, as we know. It's when people lose all confidence in a currency, and as fast as they get it, they spend it. And we've seen points in history. I wouldn't rule it out, but at this point, I don't think it's something that would just instantly happen. But it comes back to this point with regards to what happens in the coming week. But it really, I think it doesn't matter anymore. People think credibility matters. I don't really. How many people really have any faith or trust in the credibility of central banks? They'll publicly say things, but privately, I very much doubt it. It's just they're caught between a rock and a hard place. It depends, yes, if there are other banks, and there are rumors, and we'll see if there's any substance to those rumors. But if they get to the point where it's obviously becoming the problem, where they're going to have to come out and go, well, it's not 300 billion QE in a week. Maybe it's $1 trillion. Maybe we're going to have to take some extraordinary measures. Maybe we're going to have to do what we did in 2000 and just slash interest rates. Then it becomes a question at that point, is because and we talk about confidence events with currency. The confidence then is because people still in institutions don't really believe there's a big problem. It sounds ridiculous, but they don't. Well, what's the problem? Okay, we had a jittery problem last week, and well, they apparently fixed it. And we've got this jittery problem now with UBS and Credit Suisse. Though it looks like they fixed it. But if it gets to the point when people think, hang on, I'm not so convinced they're fixing anything, then you might start to see more and more capital outflows, more and more institutions, high net worth individuals, sovereign nations going, we need to plow into precious metal, buy principally gold. And that then of itself starts to create problems, because to what extent does this happen? How does this affect the price? Does it start to cause the risk of bank runs in institutions we wouldn't necessarily perceive to be the case? And it's just what happens is with confidence in equity markets. It's just when the confidence goes, that can cause very rapid effects. And we've got all the problems just cumulatively happening now at the same time. I made this point, where we were in 2008 is a cakewalk compared to where we are now. We have an everything problem. It's not just the banks. We have problems in the economy. We have problems geopolitically. We have questions about the very future of the dollar. And there's these enormous shifts happening, which we've never seen in history. And we're having, inflation's a problem. I mean, we've got debt like we've never seen before. We've got broken treasury markets. I mean, look at last week,
Yeah.
because I know some people who are obviously trade in bond markets. They were telling me, I was having to wait to execute a trade was taking me several minutes. I mean, this is not a liquid market. This is a market that's broken. And if the treasury market's supposed to be the most liquid market in the world, then you could fool me. So there are all these massive problems all conflated at the same time.
Yeah.
And it's not like they can focus on one thing and think we can fix this. There's the 1,000 spinning plates scenario, which I've used before. And if one of them stops spinning, the wheels fall off, and they're having to focus on so many things and so many institutions. And, what is there a contagion effect in this part of the banking system? What happens to credit? What happens to liquidity? And because everything depends on credit, and as the economy slows down and we actually start to deal with the reality of the economy instead of all the lies and data that comes out about inflation and unemployment, etc. And
Paul.
that's when it all changes, and then we could see some real fireworks happening.
Yeah, Paul, we got 4 minutes, and
Sure.
wanted to get your view on the Bank of Japan and what's I think the new governor is coming on the 8th of April. Do you think there's a problem? I guess the Japanese banks, they're zombie banks. But how it seems like the attention has gotten away from Japan now, but how do you see the BOJ, the Japanese banks, and how it could impact the West?
Well, the question, this is an interesting point. Okay, they're slightly raising the rate at which they're throttling the yield curve, and maybe they're going to have to continue doing that. But if they were to let the brakes off properly, I think Japanese banks would be in major trouble very rapidly. So I would suspect they'll have to just keep doing what they have done. Okay, the currency at the moment's kind of, stabilized in the range it is. That doesn't mean anything. I'm not expecting this new governor to do anything radically different. But, there comes a point where, okay, if they keep trying to, again, it's papering over the cracks, but at some point, do they just blow up and destroy the yen in the process? Or but if they then, it's all about the yen, then they're just going to blow the financial system up and then correspondingly blow their economy up. So they're just juggling like thermonuclear hot potatoes, trying to because they've got no wriggle room. There's nowhere they can go to resolve the problems, and the West is is exactly the same position. It's not like we can lower interest rates, go, this will solve a problem, or we can raise interest rates, because fundamentally this nonsense about we have an overheating economy. We want to raise interest rates to create unemployment. It's just ridiculous. The US economy is not overheating. The US economy has been largely in recession since 2008, and they can produce whatever data they like to the contrary. But the US economy, and then they were going, it's not in recession. But it was in recession, but the next breath was supposed to believe it's overheating. Well, it's not. They're just trying to find a justification to raise interest rates. And so therefore the Japanese have a point. Do we defend the yen? Or do we try to defend the economy and the banking system?
Yeah, I got a chart here, Paul.
Yeah.
Gold and Japanese yen hit a record on Friday, 261,771. So yeah, the dollar is still all these currencies are going to go down, but against gold.
Yeah, it's the same. I think we had a record high in the pound, and also the euro. How long is it going to be before arguments say gold breaches, what was it, 2060 or whatever it got to?
Around that level, 70.
Yeah. 2070.
I think we could be there, this coming week.
And depending, it could, we could, depending if there are more serious problems, and then we could start to see it accelerate very rapidly. I'm not saying it will happen, and I'm not one to speculate on prices. I'm not really interested in what is priced in dollars per se. It's just a figure of merit to give us some indication of how we perceive the currency is devaluing in gold terms. But there could be a situation where gold could rise 5-10% in a day if something pretty significant happens. But let's be extremely careful when we say that. Doesn't mean it's definitely going to happen. And but it just remains to be seen. Really, I think the barometer is going to be, how does the market react to this deal between UBS and Credit Suisse? We won't know instantly. There'll be an instant reaction, but what's the longer term reaction? What's the perception with regards to what this means? Does it resolve the problems that seem to be hinted at today, that it could have caused a broader contagion problem? So it's one of those things. Maybe we have these situations either happening March time or sort of September, October. We're in the March window again, where things do, you can see these kind of gyrations and problems. But this isn't the first time we've had problems. Look at the repo crisis. There was another one. Look at the time of year in 2019. It's one of those classic things where, and we've seen this before, where people like to talk about, what the Fed's doing. Well, remember when the Fed raised interest rates and had to slash them in 2019 because it was all going horribly wrong?
Yeah.
Well, the argument is things are much worse now, but they've kept persisting in raising interest rates. But I will make, and this is purely speculation, but I suspect one of the reasons why there was a big move to try and raise interest rates partly was to project dollar strength. The problem is, and I think it was because de-dollarization was happening, and the aim was, well, as the dollar gets stronger, all these other global currencies will get weaker, and they'll desperately want to hold dollars because to pay for goods. So it will support the dollar because de-dollarization is happening. And in fact, ironically, it blew up in their face because of the Ukraine war as well. Nations like India were going, no, we're trading with the Russians in rubles or in dirhams. And the reason they want dirhams is because Russia's buying goods from the UAE. But now we're finding India wants to trade in rupees with over a dozen, maybe 18 nations.
Yeah. Have you heard of the rumor, sorry, Paul, of the rumor that Japan is thinking of joining the BRICS?
No, I can't say I have. But again, it wouldn't be entirely surprising. It's
apparently it's from Jim Willie. You used to?
Yeah, no, I don't know. I couldn't say whether that was.
Yeah.
For me, it wasn't remotely surprising to see the approach between the Saudis and the Iranians. With regards to Japan, it's possible, but I can't personally say I've heard anything. But that doesn't necessarily mean, of course, it can't happen, or at some point in the future it won't happen. But the general point is that de-dollarization is continuing, and it hasn't actually had that desired effect of supporting the dollar. Now, I'm not saying raising interest rates was all about the dollar, but there's also an argument that we didn't have foreign buyers of treasuries, and if you allow the yield on the treasuries to rise, and therefore you might start to then, the belief could be, well, we've got foreign buyers, maybe they'll now buy treasuries, but it's still not happening. No foreigners want to buy treasuries. No. Because again, we're back to the point. Well, you sanction the Russians or try to into oblivion, you try to destroy them. Well, you might do it to us. So why are we going to want to buy treasuries still? But okay, I'm framing that under just the thought process. I'm not saying there's substance to it. I think potentially might be substance to one of the reasons why they've raised interest rates, but now they're starting to go, okay, it's not working. I don't think they seriously believe it will curb inflation, but maybe they do. But if they don't, then this will be the acid test, is what do they do now with regards to interest rates? And again, it becomes a question, Do they want to defend the banks? Do they want to defend the financial system? Do they want to defend the economies? Or do they want to defend the dollar? I mean, and if they keep raising interest rates, they're trying to defend the dollar. But from my perspective in the process, they're not going to defend the dollar by doing this. They're only going to cause more and more risk of huge problems in the financial system, which may actually encourage more and more people to invest in precious metals. So, I mean, and if the gold price keeps rising, I mean, what signal does it send if gold in dollar terms is $2,500 an ounce, just for argument's sake? It sends a very bad signal that in fact the dollar's weak, and it doesn't matter what the dollar is in yen terms or anything else in gold terms. It's obviously gold. The currency is devaluing in gold terms. So I say they're now caught between a rock and a hard place. There isn't any obvious way they can get out of it. In fact, there is no way out of it. They're going to have to accept the reality that it doesn't matter whether they raise interest rates, lower interest rates. We're now in that phase where we've now got serious problems and brewing in the financial system, and we'll find out if they've contained this or this is just going to carry on. But let's bear in mind, and I'm not trying to draw parallels in history, but we know what happened with Bear Stearns, 2008, and we sorted all the problems, and then
6 months later,
Lehman. So, and I'm not trying to say in 6 months from now,
September we had the UK.
Northern Rock.
No, September last year we had.
September last year, yes, with the pensions.
Someone just noted that tomorrow is the spring equinox. The pound collapse happened in the autumn equinox. So the equinoxes seem to be an interesting time. But Paul, we're gonna have to stop here. The live stream. I usually do it for an hour, and we've been going on for a bit longer. I'd like to thank you for coming.
It's a pleasure. Thank you, and thank you for asking me. Yeah, you were lucky actually. If you'd asked me about 20 minutes later, I couldn't have done it. So.
Okay, great.
So that was very good time.
No, but so everyone, thank you for coming. I think we had about 1,700 viewers concurrently, which isn't bad. Thank you everyone for being here, and I'll talk to you tomorrow. Let's see, end the stream. Hi, Paul.